Hello, this is Crandall with Credit Suite, and in this short video we're going to dive in and talk a little bit more about Virgin Startup Loans. So if you're just starting a business, you're about to get some information about what kind of financing is actually available for startup businesses. Now, the first we're going to talk about is unsecured financing, which is probably the highest loan amounts, best form of financing for startup businesses. Now, there's a couple different kinds we're going to dive into. One has to do with if you have good personal credit. If you have good personal credit now, or a guarantor that does, then you can get unsecured credit cards in line that do require a personal guarantee. Now, there is another form of financing that's out there that's unsecured, that if you have good business credit built, if you establish a good business credit profile and score, you can get approved for. This is not based on your personal credit, but because it's not based on your personal credit, you can get approved without a personal guarantee. Now, when we look at the first option, you can get $10,000 to $150,000 using your personal credit to qualify you. Now, these accounts don't report to the consumer reporting agencies. They usually report to the business credit reporting agencies. So this is like a really nice side benefit. Not only can you get up to 150 grand, but you can also build your business credit in the process. And in doing so, a few months after you've established your business credit, that opens up even more funding for you. Now, you've got to have excellent personal credit open now, or excellent personal credit now, or a guarantor that does. You have to have open revolving credit accounts or credit card accounts with limits no less than $2,000 to get approved. You need to have less than 3 inquiries in the last 6 months on your credit report, and usually you can get approved for about 5 times whatever your highest credit limit account is now. So if you have a $10,000 credit card account now in your consumer credit reporting, you could usually get 50 grand in unsecured financing. So it's usually 5 times the amount of your highest credit limit account, and you usually can get 0% rates for 6 to 18 months. Then they're about 5 to 25% after that, normal credit card rates, and the lender will usually charge anywhere between a 9 to 12% success-based fee on this kind of financing. Now, the other kind of financing is using your business credit. So you can start from scratch, build a business credit profile in about 4 to 6 months total time, get to a point where you're getting 10 to 15 or 10 to $50,000 limit revolving accounts that report to the business reporting agencies, not the consumer. It takes about 6 months, as I said, to build. But what's nice is that personal credit's not used for qualification. Even as a startup, you could build EIN credit, and in doing so, you could get $10,000 to $50,000 limit accounts, regardless of your personal credit. So this is different than the last option I showed you, where you'd have to have good personal credit to get approved. And approval amounts are equal to the current credit limits that you have now on your business report. So again, you're going to have to build your business credit report first, but in our experience, you can usually get $5,000 to $10,000 limit business credit store credit card accounts within about 4 months or less. So that means your approval limits on these kind of business accounts are usually going to be about $5,000 to $10,000 per card. Same kind of rates, 5 to 25%. You won't have to pay any kind of fee on these because these are just normal credit cards that are built for your EIN. Now, you can also use collateral and get asset or collateral based financing. And some of the financing you could use is account receivables. So let's say you have a bunch of orders, you have a bunch of receivables to start your business, but yet you don't have the financing to fulfill those orders. Well, this would be a great solution. Let's say you have stocks, bonds, or other securities, or let's say you have an investor that does. You could use those as leverage, borrow as much as 90% on those. Sometimes cash in hand can be used as collateral. If you have inventory already purchased, or you have outstanding purchase orders, these things can be used as collateral to borrow against them to get cash loans or working capital lines of credit. Now, you can also use equipment and a 401k as financing. So you can actually borrow as much as 50% against existing equipment you own, or 100% against existing 401ks that you have. You could even use some commercial real estate, or if you're an auto dealer, you could use your car inventory. Maybe you've purchased your inventory. Now you need working capital. Well, you could use that floor plan as collateral and get financing against it. Or they have really good low interest rate long-term loans for insurance agents using your book of business as collateral. Now, other solutions might include AngelPad, which is a great source for web technology entrepreneurs. There's a source called BeatSpring where you can get up to $20,000 in startup funding for a business. Now, these are more grants than loans. So there's kind of some different options here with grants, loans, other sources to look into. There's a company called First Round Capital for investments in the millions. So if you have a really powerful startup business, you can get very high level financing there. The Jumpstart Founder, you can get up to 15 grand. And then the Launch actually has competitions where they give out as much as $500,000 for brand new startup businesses. Some other really good sources for you. So hopefully you enjoyed this video. If so, make sure you like the video. Also, make sure you subscribe to our channel where we have a lot more videos on how to get money for a startup business, even 30 to 60-minute long sessions where we walk through really in depth how these types of financing work, the rates, the terms, how to get approved, all those type of things. Also, make sure you click on this video where we give you access to either a free resource or an easy way to qualify for business financing, because these are also tools and resources that will help you get approved for financing, even as a brand new business. So again, this is Crandall. Thank you very much for taking the time to check out this video. Look forward to seeing you on our next video.